Warren Buffett's singular bet. Apple dominates Berkshire's portfolio. Warren Buffett's investment prowess has once again captivated the financial world, with a staggering portion of his $369 billion portfolio concentrated in a single stock, Apple. As the CEO of Berkshire Hathaway, Buffett's track record of compounding capital at remarkable rates over multiple decades has earned him the title of the Oracle of Omaha, making his investment moves a subject of keen interest for investors worldwide. Apple, traded on the Nasdaq under the ticker symbol Apple, holds an outsized 41.4% share of Berkshire's portfolio, standing as its largest holding by a significant margin. Since Buffett initiated his investment in the tech giant around 2016, Apple's stock has witnessed an astonishing surge in value, skyrocketing by an impressive 542%. This meteoric rise has firmly established Apple as the cornerstone of Berkshire Hathaway's investment strategy. The decision to commit such a substantial portion of Berkshire's capital to Apple was driven by a multitude of compelling factors. Even in the nascent stages of Buffett's involvement, Apple boasted one of the world's most formidable brands, bolstered by its immensely popular lineup of hardware products. This brand strength endowed Apple with significant pricing power, as consumers eagerly paid premiums for its cutting-edge devices. Buffett's investment philosophy, rooted in the belief in businesses capable of consistently raising prices without eroding demand, found ample validation in Apple's business model. This sentiment finds resonance in Buffett's other top holding, Coca-Cola, which shares similar characteristics of brand strength and pricing power. Moreover, Apple's stellar financial performance further fortified Buffett's conviction in the company. With an operating margin of 30% in fiscal 2015 and an astounding $70 billion in free cash flow generated that year, Apple underscored its status as a financial juggernaut. This trend persisted, with Apple generating an impressive $100 billion in free cash flow in fiscal 2023, enabling management to deploy capital effectively through dividends and substantial stock buybacks. Valuation was also a crucial factor in Buffett's decision to invest in Apple. During the first quarter of 2016, Apple shares traded at an average price-to-earnings (PE) ratio of 10.6, presenting an enticing buying opportunity for such a dominant company, particularly in a market characterized by lofty valuations. However, prospective investors must exercise prudence in the current market landscape. While Apple has undoubtedly delivered outsized returns for Berkshire and Buffett, its present valuation may give rise to caution. With a current P/E ratio of 26.3, albeit lower than the 32.3 recorded just 4 months prior, Apple stock is regarded as pricey by certain metrics, marking a departure from the bargain opportunity initially seized by Buffett. In conclusion, while Apple retains its dominance in the tech industry with promising growth prospects, investors are advised to meticulously evaluate its current valuation vis-a-vis future potential before making any investment decisions. Buffett's bet on Apple serves as a testament to the enduring principles of value investing and underscores the imperative of thorough analysis in navigating volatile market conditions.